Good morning, everybody. This is the live market open for Wednesday, January 25th, 2017. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Today, we'll cover, as usual, recent developments in markets, cover various charts and levels, majors and crosses, discuss the upcoming events for this week, have a special update on Trump's first, 5 days in office. Now, our currency of the week is dollar CAD, so we'll keep it in North America. It's quite relevant this week because of Trump. And as usual, we'll run through the week ahead and wrap up the show. And of course, your questions, as always, are more than welcome. If you cannot see the chat box alongside the screen for any reason, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, so good morning to everybody. Let's start. So, what's the mood in markets? Well, Trump was inaugurated on Friday as the 45th president of the United States of America, and he began his presidency with a flurry of action. Okay, lots of things going on various fronts, and he's gaining most of the attention, also in terms of markets and politics and everything. We'll have a special segment on that, but in general, he's been talking more about things related to trade wars. That means he signed an executive order that takes the United States out of the TPP, okay, out of the Trans-Pacific Partnership. That means this agreement with 12 countries that included the United States and excluded China, and now this trade deal is over. That was fully expected. He said that in the campaign. Also, Bernie Sanders said that. It was controversial anyway, but this is an action he took. He also talked about renegotiating NAFTA. Today, there's a meeting between Mexican and American officials about that. There was also talk about a side deal between the United States and Canada regarding trade, and all this weighs on the mood. Because markets want more trade and more fiscal stimulus. And when he doesn't talk about fiscal stimulus, but does talk about trade problems, markets don't like it. And another front with Trump, over the weekend was the inauguration, and then the following day there were these huge women marches, and they garnered much more people than his inauguration, and of course got angry about that, got into these kind of Twitter wars, and of course markets don't like that as well. They want to see more positive action for the economy. Moving to other things, we'll focus more on Trump, dive into detail later on. Draghi, the president of the ECB, he had this the ECB meeting on Thursday. As expected, the ECB did not change its policy, but Draghi was dovish about inflation. Okay, so inflation was on the rise in Germany back in December, and it triggered some worries from Germany. But Mario Draghi, the president of the ECB, sees the glass half empty, sees it only related to energy, sees downside risks, and we saw some pressure on the euro. Since then, at least in euro dollar, things changed because of Trump. But remember that Draghi, the ECB at least, puts its pressure on the euro. Yellen, the head of the chair of the Federal Reserve, also spoke last week quite a bit. She sounded relatively upbeat, but if you take a deeper look into what she said, she didn't say anything new. The Fed is still expected to raise rates, according to markets, 2 times this year. Okay, the US dollar has been on the back foot, mostly because of Trump, and that has been also we're seeing some kind of consolidation this morning, some kind of dollar strength, but I see it only as a correction within the trend of a weakening US dollar. The UK Supreme Court, let's take a small, talk about that for a bit. Also a big event this week. The Supreme Court in the United Kingdom upheld the decision of the High Court. That means that in order for the UK government to initiate Brexit, in order for them to trigger Article 50, to make the official announcement of leaving the EU, it needs to pass through Parliament. And it's a bill, not a motion. I also I don't understand too much in English law, but this means that it'll take more time for the government to do that. Fully expected. Will Parliament approve it? Of course they will. They will not go against the will of the people. Okay, so the more important thing in this decision was that only the Parliament in Westminster, only the Parliament in London for the whole of the UK makes this decision. Okay, so the Parliament in Holyrood, in Edinburgh, in Scotland, does not have a say on this. Okay, and of course in Scotland the vast majority voted against Brexit. And Scotland is considering another independence referendum. All right, but at least on the question of if they get to trigger Article 50 or not, they don't. So it's only Westminster. There's going to be a vast majority voting in favor of Brexit. Yes, most MPs are against Brexit, were against Brexit, but they will not defy the will of the people, as seen in the June 23 referendum. So we saw the pound falling on that a bit. Since then it recovered. Lots of action yesterday. Bottom line, not unexpected, okay? Because Brexit is coming, nothing will stop it. Okay, and another thing, well, oil prices look stable, not much to add about that. We're waiting for details about the OPEC, non-OPEC implementation. We'll have a note about that also in the dollar CAD focus. Let's talk about some data before we move to the charts. So, US core PCI rises to 2.2% as expected. No surprises over there. All in all, headline inflation is rising because of oil in all the world. And in the United States, underlying inflation, core inflation looks relatively strong in comparison to Europe, for example. Housing starts beat with 1.23 million. Existing home sales came out as expected, 549. Basically, the housing sector is chugging on. It looks okay. US jobless claims again dropped to the lowest levels seen since the early 70s, 234,000 per week. Well, and but basically, this is also a bright spot in the US economy. The Philly Fed Manufacturing Index. Here we have some hope from Trump to revive the US manufacturing sector, and we had it jump to 23.6. All in all, recent US figures were not top tier ones, and they did not surprise. We do have top tier ones soon. In the United Kingdom, some good news as well. UK jobless claims surprised with a drop of over 10,000, reversing the previous trend. So everything, touch wood, so far after Brexit looks okay. On the other hand, retail sales in December did crash with a big drop of 1.9%, but this is a volatile figure. So I would like to see a repeat of that to say, okay, UK consumers are really suffering from the stronger pound. Elsewhere, Chinese GDP beat expectations with 6.8 quarter over quarter instead of 6.7. Again, these figures are always in doubt. Many people doubt what the Chinese government says, but in looking at other figures as well, the Chinese economy looks stable. Less fears about a hard landing. It seems the economy is slowing down, but it's under control. In Australia, the jobs report was mixed. A gain of 13.5 thousand jobs, but these are mostly part-time ones. And CPI released tonight missed, so we'll see the Australian dollar standing out with, lower than other currencies. In Canada, we had a miss on the CPI with a drop of 0.2, and retail sales also disappointed. Other figures are a bit more complicated. Again, we'll have a special segment on dollar CAD. Okay, before we move on, good morning, FX Ambassador. Good morning, everybody. Good morning, Vaz. I don't know how to pronounce it. Anyway, your questions, of course, are more than welcome. And now, this is our segment for technical levels. We'll begin with the majors. So let's look at the charts. This is the euro-dollar chart currently this morning, 107.22, so a bit lower on the day, okay? But all in all, we are, the trend, as you can see, if we zoom out a bit, the trend is up. This is only related to dollar weakness. Levels, 107.10, is a level of support. It was a historic level, and also now it's the low of the day. Even lower, we have sort of pivotal line in the range 106.50, and further down, I would say 104.60 remains an important line to the downside. To the upside, we have the swing high of late December of 108.70. 108.70 is the level to look up for in euro dollar, and maybe I would add 107.80, which was the high yesterday, 107.70, somewhere that range, but I would look at the stronger level of 108.70. Cable, pound dollar. Also here we're seeing minor dollar strength this morning after we've seen the pair move up. So we had a dramatic move there from the downside. 120 is low support. 120, 120, 122. 123 is not as strong as it used to be. After the recent shattering, I would update this line and say 122.50. But much stronger support, much closer support is here at 124.15. Okay, you can see how this line separates ranges. It was also a peak earlier in the month. We have here 125.40, the highs seen yesterday, and above that we're getting closer to the initial post-Brexit lows. The big line there is 127.90. So the range for me now is 124.15 to 125.40. Dollar yen, lots of volatility in dollar yen. Clear line of support here, a double bottom at 112.50. Okay, it's followed to the downside by 111.40, a line that hasn't been tackled recently, but when the pair was moving up, this was an important level. Currently, we're battling a sort of pivotal line here, 113.50. 115 is worth noting, 116 and 127. Sorry, we have never reached 127. 117.50 is a strong level to the upside. So currently, I'm watching 115, a round number, not so strong on the technical side, but still important because it's round, and to the downside, 112.50. Relatively strong ranges in dollar yen. Dollar CAD. So quite a bit of movement here. I know this currency pair is ignored by many. So to the downside, we have 130.80, quite a veteran line on the dollar CAD chart. To the upside, 131.60. Look how it worked, both the support and resistance earlier in January. Further up, 133.20 and 133.80, the recent high. Lots of action there currently. This morning, very stable. Aussie dollar, as you see, is not stable this morning. It stands out because of the weak inflation numbers. So support awaits here at 75.20, followed by 74.50. Okay, 74.50 was the support line earlier this month, January 2017. Further below 73.75 and 73.10. To the top side, we have 76.10, which was the peak before these weak figures came out, and further resistance at 77.40. Kiwi dollar. Kiwi dollar does not follow the lead of the Australian dollar and looks in a better shape. 72.35 is the current level. 72.70 is further resistance, followed by 73.50. To the downside, it looks a bit choppy here. 72.20, 71.80, and 71.30 are lines to watch on Kiwi dollar. Relatively narrow ranges in comparison to last week. Okay, and we'll complete our segment for major pairs with dollar Swiss, hugging the level of parity as we speak. We've seen dollar Swiss at much higher levels. Now it's $1 for 1 Swiss franc, more or less, give or take 10 pips. So, of course, the line of parity is now a pivotal line in the range. Strong support at 98.50, but beforehand we have 99.50, and then further below 99.50, 98.50, and 98. To the top side, I would say 101.40 and 102.10, but remember, the Swiss National Bank intervenes in trade, so I would stay away from any Swiss crosses. Okay, so this completes our segment for major pairs, major currency pairs. Now, let's talk about crosses, okay? Crosses quite popular, especially for technicals. We'll start from the most hated one, at least by me, Euro Swiss, where the Swiss National Bank intervenes. 107.35 is the current level. 10 pip range this morning. Support at 107, resistance 107.60. The Swiss National Bank would prefer 108, 110, but currently, as you can see, this is an ECG of a dead person, more or less, hardly any movement. Let's talk about a much more interesting cross, Euro-Pound. Euro-Pound, of course, very relevant for Brits living here in Spain, where I live as well. Currently 85.70, support at 85. Further support 84.50 and 84.20. So quite a range there of support. Further, well, above, we have 86, 86.40, 87.80, and further above 88.60. Okay, which was the high with this weekend gap we had earlier in the week. I would say the levels to focus on at the moment are 85 to 86. So two round numbers there holding Euro Pound. Euro Yen, two very important currencies. Currently 121.87, 121.60 is support, not so strong. 121 and 120.50 lines of support, resistance 122.25 and 123.30. And pound yen, the dragon, the Gepi, currently 142.20, high resistance over there at 145.40, support 140.25, just around the round level of 140. Further support at 139, 138.50, and 136.40. You can see this big weekend gap here. It's all related to the pound, but the yen also has its share of volatility. And we'll complete our segment for the crosses with oil prices. WTI crude oil is now in the middle of the range, well, middle low, 52.80 is the current level. 52 used to be a strong double top until the price broke higher. Still remains relevant in my opinion. Further support is at the $50 mark, closely followed by 49.50. To the top side, we have the highs of 54.50, the initial high, and then the follow-up high of 55.20. More like a wait and see mode with oil prices. Okay, so this completes our segment for crosses and WTI crude oil. Now, let's talk about the upcoming events for the rest of the week, which is busy. It's not only about Trump, but I'll start with Trump because today the US president is expected to reveal his plans for national security, and this includes a wall on the Mexican border, changes to immigration laws, and things like that. Markets don't like these kind of things. They want to see fiscal stimulus. They don't want to see less trade and limitations on immigration. But, well, that's life. Let's see how this impacts markets. It could keep pressure on the US dollar, but who knows what the next days will bring. So, but let's talk about what we do know, the known unknowns, not the unknown unknowns. So today, just after the show, we have the German IFO business climate. It's expected to continue rising. Business confidence in Germany is A-OK. We also have oil inventories at 3:30 GMT, as usual, for those trading Canadian dollar, for those trading oil. And after we had the quarterly inflation report from Australia, we have the same report from New Zealand. The fact that these countries reported only once per quarter makes the impact much larger, amplified. So for those trading the Kiwi, this is a big event to watch. I didn't put the hour here. It's 21:45 GMT. Continue with Thursday. Here we have top tier figures. Well, one at least, the first release for UK GDP for the fourth quarter. Okay, this is the second quarter after Brexit. The immediate quarter after Brexit, the summer, the third quarter, showed GDP coming out at 0.6 quarter over quarter, which is very solid. The trend is expected to continue. No immediate damage from Brexit. It's the main event of tomorrow, Thursday. Beforehand, we have the Spanish unemployment rate. Spain has been hit quite hard by unemployment, but the situation is improving. We also have US jobless claims as usual every Thursday, and new home sales, which are more important than existing home sales, at 3 GMT. Okay, new home sales create more infrastructure spending around these new homes, more economic activity in general. And on Friday, we also have a top-tier figure, this time the same one from the US. It's the US GDP. First release. This is actually the last report card for former President Barack Obama. And surprises are quite common with the first release. At the same time, we'll have the durable goods orders report for December, overshadowed by GDP because the GDP report also includes December, the last quarter of the year. We also have the final consumer confidence release for the United States. It's the last word for the week, but it's not the preliminary. Again, each time we have the first release, it's more important than any revision. Okay, and I skipped this figure, but the Japanese yen hardly moves. Dollar yen hardly moves by Japanese figures, but it does have a chance to do so this time, because we have the Japanese BOJ core CPI. Okay, there are many inflation measures in Japan. The most important one is the one that the BOJ produces by itself, because afterwards the BOJ makes its decisions according to its own data. So all in all, upcoming this week, the big GDP reports, but watch out for President Trump. Okay, so this concludes the upcoming events. And now our special segments, beginning with, again, Donald Trump. I mentioned him quite a few times. Here are a few nice pictures of Trump with $1 or 2016, or with other US dollars. Anyway, the Trump train has been derailed. Donald downs the dollar after we had the US dollar rising on hopes for fiscal spending, infrastructure, lower taxes. From the elections onwards, we had January 2017 has been a bit rough. But now we don't have to wait for speculation. We already have action. So Trump was inaugurated as the 45th president of the United States on Friday. Here is a picture from his speech from when he took the oath of office. His inauguration speech was very nationalistic. He talked about America first, okay, which sounds a bit scary. Working for the people against the establishment, repeating his campaign promises. The immediate reaction on Friday was a drop in the Mexican peso and a slightly stronger Japanese yen. But the moves were relatively small. We had bigger moves this week. The day after the inauguration, on Saturday, there were huge protests across the United States, with conservative estimates talking about 3.2 million people, including in Washington. There were more people coming for the demonstrations than for the inauguration, and he's the least popular US president so far. So far, it doesn't stop him from acting, but if his approval ratings fall, the Republicans might be a bit more reluctant to cooperate with him on things they do not like. Okay, but let's focus on markets. His first actions in office, he began working on Monday, was canceling TPP, the Trans-Pacific Partnership, and that was totally expected. This agreement doesn't really lower tariffs. It's was opposed more from the left than from the right. Also, Hillary Clinton was not so supportive of that. Bernie Sanders was fully against it, and he supported Trump on this specific action. But of course, the world doesn't like it, even if it was expected. There are reports on Trump trying to get a side deal with Canada, a renegotiation of NAFTA that will be beneficial for these two big countries, basically excluding Mexico. He announced a freezing on federal hiring. This might push the non-farm payrolls report to the downside. Okay, the federal government still needs to hire and fire people, of course, needs to be on the move, so that could be a bit worrying. And he did something that markets do like, which is announced that he'll cut regulation by 75%, whatever that means. Just trimming the first pages from any book, any regulation book. I don't know what it means, but we'll learn in the next few days, I assume. All in all, we had more moves that are trade war related that markets don't like, and we're still missing the fiscal stimulus. When Republicans are more into cutting taxes and less into infrastructure spending, okay? But he hasn't announced anything on that front. It's more trade war so far. The Donald dollar. Here is Steve Mnuchin. I think he hasn't been approved yet as Treasury Secretary. He did talk in Washington. He did in his confirmation appearances. He did say that the US dollar is a bit problematic, and also Donald Trump, the president himself, said the strong US dollar is killing us. So when they do refer directly to the dollar, and their rhetoric is different from previous administrations. They do not trump up the strong dollar, but say it is killing us, okay? So this also adds to the fact that the dollar is on the back foot. But anyway, we don't know how the week will end. Maybe he will introduce fiscal stimulus. Maybe he will tone down the rhetoric about trade and immigration. But you never know. All in all, Donald and the dollar, trade wars, China, Mexico, elsewhere, is bad for the US dollar. Fiscal stimulus, infrastructure, deregulation is good for the US dollar. These are the things we should focus on. He moves also individual stocks, but for currencies, these two things are key. These two things are fundamental. Okay, let's take another look at the charts and see if this consolidation. No, again, after some consolidation of the US dollar, once again we're seeing US dollar on the back foot, at least against the euro. The best currency to follow is dollar yen. And now our currency of the week, the Canadian dollar, dollar CAD, which is of course related to the US dollar. Demand from the US is key to the Canadian economy. But let's talk about many aspects of the Canadian economy and what it means for the Canadian dollar. So, recent figures from Canada were a bit mixed. The jobs report was really great. 53.7 thousand jobs were gained in Canada in the month of December, the last one for 2016, and that's of course great. Another good figure is the trade balance. Trade balance flips. In the US has a chronic deficit, the Eurozone has a chronic surplus. Canada, it's mixed, so it turned positive for a change, and that is of course good for the Canadian dollar. Worries in Canada, housing in Vancouver, Toronto, maybe also other cities remains a worry. In British Columbia, where Vancouver is, the local government, the regional government announced to change their taxation, and this hurts housing prices, and of course this sector is quite volatile. Retail sales disappointed in the last report just this Friday, and inflation is going nowhere fast. Okay, a drop of 0.2, and that of course has implications for the Bank of Canada. Speaking of the Bank of Canada, BOC, this is Stephen Pelosi, the guy who inherited Mark Carney's job. The recent statement, they said they're open to rate cuts, or it isn't really new, but they seem more dovish. They lean to the dovish side. They want a weaker Canadian dollar. That's not the only reason. But of course, there's lots of uncertainty over there. I don't think they'll move anytime soon. They'd rather talk than act, like all central banks. But if they do have a tendency, it will be to cut interest rates, not to raise them. Oil prices, of course, oil is fundamental to Canada, key to the Canadian economy. oil prices, of course, reached their peak, well, stood at very high levels until 2014, and since then they fell. So they did stabilize. WTI crude oil did find a range of 51 to 55 US dollars, and that's better than prices or previous prices of 40, $30. But Canadian oil extraction is expensive. They would need higher oil prices still. Okay. Now, why are oil prices stronger? Because of this OPEC non-OPEC deal announced back in November, and its implementation begins now. So far, there are positive signs about this implementation, but we'll have to see the real data only in February, because the agreement began in January. We'll have the initial figures only in February. Okay, so we'll have to wait for that. A development that did happen yesterday from the Trump administration is they announced a change in the Keystone XL, Keystone Extra Large, and South Dakota access. Okay, so these are pipelines from Canada to the main center of oil refining in the center of the United States, in Nebraska, in Oklahoma, and Cushing, Oklahoma. Okay, so it would lead Canadian oil in an easier manner to export to the United States and then export everywhere. This is a decision that the Obama administration after a long delay, Obama decided not to approve the Keystone pipeline for environmental concerns. Of course, Trump doesn't care at all about the environment, or a very different approach, let's put it this way, and he reversed the decision. This helped the Canadian dollar. Yesterday, dollar CAD fell quite a bit, okay? This was good news for Canada, bad news for the environment, but I believe it's a bit too late. First of all, the project has been delayed for a very long time, and the enthusiasm is gone. And more importantly, oil prices are just much lower. There's less economic incentive to run this project. So we had a strong movement yesterday. I have lots of doubts if this could continue. And also, Trump talked about building the Keystone pipeline under new conditions, renegotiate conditions. Same thing with the South Dakota access pipeline. So I'm not sure we'll have if these things will really happen, and if it'll have a significant impact. Okay. Let's continue here. Focus back on Canada. Relations with the United States. Canada depends a lot on the United States. Of course, Canadian dollar is always seen as a commodity currency, but it's also in Canada, there are 30-something million people. In the United States, 10 times that number. And of course, their biggest neighbor. They depend on demand from the United States, Canadians. So renegotiating NAFTA could create, of course, a lot of uncertainty. But, and Canada is, of course, pro-free trade. They advanced a free trade agreement with the European Union. They're part of the now defunct TPP, Trans-Pacific Partnership. Canada under both administrations, under the Trudeau government now, and beforehand under the Harper government, of free trade. But we have reports coming out that a US-Canadian side deal, okay, excluding Mexico, could of course help Canada if it comes in favorable terms to Canada. So we'll have to watch out for news regarding trade with the United States. All in all, I see a bit more pressure to the upside, but it's quite choppy. So the Keystone pipeline, of course, limited the upside, but I think it's only for now. I think there's more pressure to the upside because Trump is basically against trade, and the fiscal stimulus that in the United States that could help Canada is not really helping. And oil prices, I don't believe they'll go up so fast. Let's conclude this special report about the Canadian dollar, about dollar CAD, with a look at dollar CAD charts. So if let's zoom out to see the bigger picture for our special currency of the week. Here we are at 131.53, okay, and Of course, the 130 line is support. Before that, we have 130.80. Under 130, we have 128.30 and 127.70. Looking up, 131.80, 133.20, 133.80, and higher above levels that we haven't visited, well, no, a few weeks, 134.60, 135, and 136. Okay, so we're seeing choppiness. We're seeing maybe slight move to the downside, but I don't see that as lasting for too long. Okay. And now let's preview the week ahead, the week that begins on January 30th and ends in February 2nd, if I'm not mistaken. So on Monday, we have a few figures on Monday. In many cases, Mondays are quiet. This time we have the Spanish GDP, first release, German inflation figures, which jumped last month in December. So now we have the preliminary number for January, and it could be very interesting. And the US Core PCE price index, the figure that the Fed watches for inflation. Things warm up on Tuesday with a rate decision from Japan. The inflation figures for all of the Eurozone, Canadian GDP. So that, of course, also moves the Canadian dollar that we've talked about. USCB consumer confidence, the conference board's consumer confidence, and the jobs report from New Zealand, released only once per quarter. And then February 1st, the first day of a new month, we have top-tier figures. Manufacturing PMI in the United Kingdom, the US ADP non-farm payrolls, a big hint for the non-farm payrolls on Friday. The ISM manufacturing PMI, also top-tier figure. A look at the manufacturing sector. Let's see if they're cheered up by Trump or not. And the Fed decision. This Fed decision, we'll preview it, of course, next week as well, but this Fed decision is not as important because in December we had a rate hike, we had new forecasts, we had the dot plot, we had Yelen's press conference. This time, no changes expected, no press conference, no dot plot. Nevertheless, the tone of this decision, if they're more upbeat on inflation, less upbeat, more upbeat on the economy, less upbeat, this makes a difference for the US dollar. So even though it's a minor decision, it still rocks the dollar. On Thursday, it's the UK's Super Thursday. We have a rate decision in the UK and the quarterly inflation report. So in November, and the last big decision from the Bank of England, they decided to move from a bearish bias, from a dovish bias, to a neutral stance. And I don't think they're expected to change anything now, but this is still quite important. Of course, there's a press conference, there's lots of new data, and we're seeing how the pound is sensitive to anything that's going on. So there will be lots of fireworks over there. And on Friday, we have Chinese manufacturing PMI, UK services PMI, the most important purchasing managers index, and of course the US non-farm payrolls. This time we will get the ISM non-manufacturing PMI only after the NFP. That means it's less important, the ISM non-manufacturing PMI, but it also means that the non-farm payrolls will be a bit less expected. This is the non-farm payrolls report for January. Basically, you can attribute this to the Obama administration, the former administration, and this is what Trump gets. He might dash the report, whatever outcome. What's important for markets is the level of wages more than the gain in jobs. Of course, if it's a huge disaster in jobs or a huge surprise, it makes a difference. But assuming we'll have more or less as expected in the headline figure, wages are important, especially as last time they reached the highest level since 2009 at 2.9% year over year. So wages are more important than the headline figure, in my opinion. Okay, well, not only in my opinion, I would say. Anyway, next week, turn of the month, that means we have build up to the non-farm payrolls, top tier purchasing managers indices, a big decision from the Bank of England, and also decision from the Bank of Japan and the Federal Reserve. which even though it isn't the big decision, it is still of importance. Okay. All right, so we reached the end of the things I've prepared for you, so it's time to wrap up the show. Let's take another look at the charts. Well, euro dollar, too stable, too boring. Anyway, this is the wrap up for the live market open for January 25th. Markets are moving according to the Donald, according to Trump, and this is the main theme. He begins his presidency, the 45th president, with lots of action, mostly trade war related, which markets don't like. That's why the dollar is falling. But let's see if he provides some announcements on fiscal stimulus. In the Eurozone, Draghi sounded dovish about inflation. This keeps the euro a little bit more depressed, or, well, we did see it rising, but maybe it would have risen to higher ground had Draghi not been so dovish. Elam was basically upbeat, but nothing special. The US dollar in general remains on the back foot. In the UK, the Supreme Court did not surprise by saying that Parliament must approve Brexit, but only the Parliament in Westminster, not any of the devolved entities, not Holyrood, not Scotland, okay? And oil prices look stable. Among the key data figures, I would say that inflation is rising all over the world, and the US manufacturing sector is a bit more hopeful for Trump. Okay. Elsewhere, the big theme of at least this morning is that Australian CPI missed, and this weighs on the Australian dollar. We'll look at the charts very quickly. Other figures were basically mixed in the UK and as expected elsewhere. Let's take a quick look at the chart. As aforementioned, euro dollar not going anywhere fast, but higher on the Trump slump, on the dollar downing by the Donald, if you wish. Support 107.10, high resistance 108.70. Okay, pound dollar looking a bit better this morning. 125.20, resistance there 125.40, support 124.15. Dollar yen relatively volatile, 113.60 at the moment, support 112.50, resistance 115. Dollar CAD had this keystone boost. We had a special segment about that today. I don't think it'll last anyway. Resistance 131.80, 133.20, support 130.80 and 130. Aussie dollar stands out by losing ground while other currencies are relatively stable. So we're making a dip under the 75.20 line, further support 74.50, resistance 76.10. Low inflation, low currency. And, well, Kiwi dollar currently 72.40. This is quite stable, like most currencies this morning. 72.20, support 72.65, resistance. Okay, so anything else to talk about? Yes, in this wrap up, just mentioned the big events coming up this week. The biggest events are Thursday and Friday. Thursday, it's the GDP release from the UK, the first release for Q4. Let's see if Brexit begins biting or not. So far, it hasn't been a disaster. That's the main event for tomorrow. And for Friday, the main event is the first release of US GDP. It tends to surprise, tends to be a bit of a wild card. It's the last one for 2016, last one for the former Obama administration. Okay, so these are the big things to watch out for. But in general, I would say the big thing to watch out for is the big guy in the White House, the Donald. First days in office, makes lots of decisions, lots of statements, lots of tweets as well, and things could get wild on that front. Okay, so thanks everybody for coming. As usual, thank you FX Street. As usual, you can see a rerun of this show and all the special segments we did as separate video clips available later on FX Street and also on Forex Crunch. And that's it. I wish everybody a safe and successful day in the markets. Stay safe. And that's it. And see you next week. So that's it. See you next time. Bye-bye.